All right, team, we are back with the Ask Maddie show today. We are going to have a great show for you guys today. You guys brought a lot of great questions. We are going to discuss XRP today, hopefully get into some charting. Also, if we were to come up with a crypto strategic reserve, how would we place that out? This person also included Dan in it, so you're obviously not hearing from Dan's perspective today. Any new partnerships with Casper? And how I think someone said in here, how can XRP get to $20? So I think that's going to be one of our big focuses of today. Team, before we get into the content here, it's important you become a CryptoCharge member. Maddie, what are the people getting at CryptoCharge?
You guys are just getting, incredibly comprehensive support at CryptoCharge from an educational perspective. So our number one goal, and I would say our big mantra, is to empower people to become, self-sufficient, self-directed investors, right? And that's not to tell you what to buy or when to buy it, but showing you guys on a chart perspective, Monday through Friday, where those value zones are, where our heads are at with, whether we're buying, selling, and some of those processes, helping you guys craft plans for multi-step exits, teaching you guys about our just general strategy for, cycle trading, which again I think is probably a good fit for about 90% of people out there. It's not so short term that you have to quit your day job to do it. It's not so long term that you're hands off and you're waiting for 20 years to realize some profits. We try to give you guys that with those updates, as well as the coin library and our Discord and a whole bunch of other supports. So again, $49 a month with code YouTube plus a 30-day free trial. So you guys get 30 whole days with code YouTube to try it out. Just day 29, you're like, hey, not my thing, no problem. Shoot me an email, we'll get you canceled, won't charge you at all.
Love that, Maddie. And also, team, I saw a lot of crypto people post their macro opinions, and they're trying to pull from other bigger CNBC and big news outlets when it comes to their macro. And we have a macro guy in house, Dan, and he gave some great coverage yesterday. Even though it was quick, it was some great coverage, and you're not going to get that anywhere else. Discussing the cooler inflation last week, the two projected rate cuts this year, what the Fed's doing today at this meeting, what the Fed's doing today at the FOMC meeting with the Jay Powell press conference and the Q&A is big for the markets, but you're not getting that intel from anyone, and you can only get it from Dan Habib. So make sure you sign up with CryptoCharge. Let's get into some of the questions for today, Matt. Jose says, how many trillions USD does XRP need in order to get to $20?
Good question. And I actually really love questions like this, because these are the kinds of things that you need to be asking yourself before you make an investment at all. Especially when you're looking at your targets and you're kind of like trying to build a plan for yourself, whether it's a simple 3-step exit like we talked about, or you're going to maybe add additional trims in there. We want to look at some of the future pricing on that and look at circulating supply and go, okay, if I multiply this future expected price times the circulating supply, how much money needs to be in this market in order to make that happen, right? So if we're seeing, for example, you have this small cap and hey, maybe you're very bullish on it, but let's say it requires $5 trillion or $10 trillion for us to get to those targets. Maybe we need to reassess those targets, even if the Fibonacci support it, and go, okay, if our total expectations end of cycle are 7 to 10 trillion, if things go really well, that's probably not realistic, right? So we always need to make sure we're doing that. And this is a very, very good place to start when you guys are trying to figure out what is it going to take. So when you look at circulating supply, you guys can go to coinmarketcap.com. It's a great place to find all the basic information, including circulating supply, max supply. And that's also something you guys want to look at when you're doing research, is looking at that vesting schedule. So are more tokens going to come online? Is there an inflation rate? If there is a vesting schedule, when the team gets some on, how often are they going to get those? Is there a big unlock coming in the next 6 months? Those are very important things that you guys need to be looking at to make sure that you're not, jumping into something that looks great price wise, but there's a massive unlock coming that could potentially put pressure on the market. Now, it's very simple math. There's roughly 58 billion XRP that are circulating right now out of the 100 billion that are totally available. So a $20 XRP would put us right around $1.1 trillion or so. So we're sitting around 140 billion right now. So rough math, we need about $1 trillion to come into the market, right? Current market price, in order to see that $20 price point. Now, XRP being one of the larger assets out there, and as you guys know, big announcement today. The Ripple case, the SEC Ripple case, has been completely dropped, right? So we already got the big piece a long time ago, right? Which was XRP's non-security status, but now we have no reason for people to, even consider XRP being a risky investment. You have, ETF filings. You have all this great narrative that's happening right now, including, the complete change in tone in administration and SEC. So, I think that you put all that together, you look at the utility, you look at all the partnerships, and now I think we're going to see a flurry of partnerships, come out with Ripple, or even some of the NDAs that have been under wraps for the last several years. We're going to see a lot of those NDAs start to come out as well. So, I think that when you look in the rear view, you're going to probably think, wow, 1 trillion was a deal of a market cap when you look, 10, 15 years in the future for XRP pricing. So I think it's very achievable. I look at where ETH's at, I look at where Solana's at, and I think now that XRP has nothing holding it back, $1 trillion entering the market by the end of cycle is not unreasonable.
Maddie, pull up the XRP chart really quick because I believe that $20 XRP is roundabout the 8 Fibonacci, the 8 Fibonacci extension level, which would
Sure.
actually be like a crazy blow off top for us. But can you double check that and see if that's true?
Definitely. Let's go ahead and take a look here as a team, guys. So I'm using the 2-week chart here. I'm also using the aggregated crypto chart. We always want to do this when we're looking at price history so that we're getting as much data as humanly possible. There's two big fib ranges when we look at the XRP chart. Obviously, you have the 2013 high, and then you have the 2013 low. You guys can see that those were respected back here in 2018, and we actually just touched that as the 55 here. So you look further into this much older sequence, you can see closer to like the 377 Fibonacci extension, you get around $22.25. Now, if we go off of the more recent swing high, swing low, off of the 2017 high, and we're just shy of poking that high there, you guys can see that the 8 puts us closer to 26. And then we can also pull in the very, very more recent range in here, right? This last crashing structure from 21 through 22. We get the 8 around 14 and we get the $22 mark around 13. So you guys can see actually $22 has most confluence between a lot of ranges. And this is how I really want you guys to look at fibs is like, yes, you can manipulate them and kind of get the target you want, but the goal is to find 2 or 3, especially when you have a lot of price history, 2 or 3 meaningful crashing structures, and then see what kind of confluence you see across those. And that's probably going to give you a better idea of like where I can maybe see that blow off top scenario.
Antonio says GM will use NVIDIA chips for self-driving cars. Will HBAR play a role in this?
Well, first of all, it's good speculation here, and there's definitely a lot to consider when you look at hardware, right? And hardware is always going to be a factor that changes dramatically, as time goes on. You guys even look if you guys follow like GPU developments, every couple of years or so, you get a new series of GPUs that come out, and they're just vastly bigger and more expensive than the previous ones. They suck more power, but the computing abilities just become better and better. So of course, can HBAR help maybe like take some of that data and quantify it and create logs that can help us understand how efficient this technology is and maybe make recommendations for new chips or how to make those chips more efficient? Yeah, sure. But I think that it's definitely kind of a bit of a loose connection as of now until we see a little bit more sandbox testing. But I do think it's a possibility. Chips are going to be something that probably are also going to be a big inflationary aspect over these next few months to maybe a couple of years with tariffs and whatnot. So if tariffs are they stick, right, and we don't see trade deals breach, we might see a big increase in chip production, and that might slow down short term some of that advancement or innovation that you see with the combination of testing, because it becomes more expensive and it's not necessarily something you want to do in a tight credit environment like we are now, where rates are still very expensive to borrow money, to manufacture, to do all that stuff. So I know that we kind of took a few directions there, but I think that yes, it is very much a real possibility, but there's just a lot of factors to consider of like, is this going to affect price this bull run because this narrative comes? I don't think that's a reality. We're talking about 10 years in the future, and this is something that we see instilled in a regular basis. Yeah, I think that's a reality.
Pat says, buy Casper or HBAR now.
It's all about risk to reward, guys, right?
Buy cum coin.
Fart Boy, God, there's just so many now. And I think, who was it? I think it was Radium is trying to create like a pump.fun competitor to, crank out meme coins. And, I know that you guys, love the degenerate side of it and it makes you feel good, but, at the end of the day, guys, it cheapens the space so much. We already have so many black eyes in this industry. Black eyes, right? Not black guys in this industry. But make sure that we are investing in things that make sense for us. So when we look at, for example, 2 good quality assets, Casper and HBAR, we talked a lot about HBAR on Monday's after hours show. So make sure you guys go and check out the HBAR show that we did if you guys are interested in it. But when you look at the risk to reward, Casper to HBAR, even if we're talking about short-term gains for Casper, we're talking about Casper at 22 cents, 30 cents, that outweighs HBAR many times over than HBAR at $2, $3, or $4, right? So again, if HBAR offers a bigger correction, we come down into the 10 to 12 cent pocket. We showed you guys the risk to rewards there. Those full extensions give us over that 10x opportunity. But again, still, with Casper, you have better risk to reward. You also have that staking reward aspect to it. Now, HBAR has it as well, but Casper's is far more aggressive. So right now, I think it's 15.5% APY. That obviously fluctuates based on TVL, total value locked, a couple other factors. So right now is a great time to capitalize on that. I've even had some one-on-ones recently where, generally we talk about a DCA approach, but some of our newer members, or they're trying to open a Casper position, are actually a little bit more keen on opening a little bit more at spot right now, even though the DCA might help them with an average. Because that APY is so aggressive, it makes more sense for them to get those compounding rewards earlier on. So a lot of factors to consider. They do approach 2 different things, right? Upgradable smart contracts are very different than just very high TPS for microtransactions. 2 very different value cases, 2 very different market capitalizations. but I wouldn't say one's better than the other. There's just very different verticals and very different opportunities right now. Price wise, it's pretty obvious.
Shaw says, for the infamous Ask Matty show, if CryptoCharge is a strategic reserve, a collection of coins that Matt, Gav, Dan will hold for the next decade or 20 years, what coins are you picking? And Shaw said, we're infamous. I just want to say, Shaw, we are not infamous. We are famous. We are not infamous.
I guess it depends. If you're a big meme coin fan, then maybe we're infamous for talking about utility. But I guess it's all about perspective. So what would we pack in a strategic reserve? So obviously Dan's not here, so he can't speak for us. But I know that Dan obviously would want to include Bitcoin in there, even though I've talked a lot about Bitcoin not being the best risk to reward. I think you'd probably include it in there because it's going to be a good, just kind of consistent long-term hedge. It's the equivalent, I would say, of having like some Dow Jones exposure in your portfolio, even though you know that you want to be heavier in Nvidia and Tesla and a handful of other like tech-related things or semiconductors, right? That'll give you a bigger, better edge. But even if we were to say, let's say 5% of the strategic reserve being Bitcoin, I wouldn't be against that. I would say I would also obviously want to see very heavy XRP exposure. I would want to see heavy Algorand exposure, HBAR. And again, I'm trying to think about reserve wise. Like, there's a lot of like other utility based tokens that I wouldn't necessarily would say are like hyper valuable in a strategic reserve, just because they have such very like niche use cases compared to others. So I would say really more tokens or assets that are focused on payments is probably going to be the better reserve-based currencies. Maybe we can even throw like a Cardano in there, and maybe a Solana as well, even though I think Solana's price-wise is very expensive right now. If Solana can get their, TPS situation scaled down to where it's like we're not just trying to go for these crazy high numbers, which is possible. We saw the congestion that happened with the last meme coin fiasco, and it basically shut down the network. Now, when I look at sending stable coins and a variety of other things, Solana is like top 5 choice when it comes to sending stables compared to ETH and a variety of other networks. So I think Solana has the ability to really shine, but they got to get some stuff dialed in because we've had a lot of outages in the last 2 years, and that's not something you can have on a regular basis if it's going to be implemented. But I think there's enough progress and enough interest that Solana could be a competitor in the space. Now, again, right now today, I would still rather probably pack it full of XRP versus Solana, both price-wise and utility-wise. But those are some of the things that I would consider. But what would you add, Gavin, if you had to add to the reserve?
Well, I just want to ask you a question there, Maddie. So this is with the thought process of a stockpile, a reserve that you can't borrow against, right?
Yeah, I mean, I guess not being able to borrow against it, but we could, right? We could technically borrow against a stockpile. I guess if we're following the rules and you're not supposed to borrow against it, then I guess it doesn't matter.
Right? Yeah. If I have to follow those rules, then I don't even want to. Then you probably don't want to hear my opinion. But if I can break those rules and borrow against it, I mean, you have products flowing out right now, and one I was breaking down to Dan yesterday because the Fold website, the Fold app, is got a bunch of seed round from David Sachs's company, his venture capital fund, which is what caught me onto Fold. I looked at Fold. You can sign up right now, and you can get either their debit or credit card, but with their credit card, you get 2% back in Bitcoin. So you're stacking crypto just like we could on Coinbase. So that's a cool function there, but let me get to the bigger function, which would allow me to do things like that. You have to borrow against your Bitcoin if you're stockpiling Bitcoin. So with features like what Coinbase is rolling out with the, I forgot what the decentralized, the open source exchanges, but basically adding that front feature on their website for your normie investor to be able to borrow against your Bitcoin and give you an actual interface. That would be cool. So if you stockpile a bunch of Bitcoin, you borrow against it, and then you're able to, use that. You're going to get it in USDC. So I guess the Fold app doesn't even really matter at that point. But you're going to get it back in USDC and actually operate with it. Now there's decentralized ways you can go about that with other cryptos, but that's just like a sure, safe way for like your traditional person that wants to work with a publicly traded company like Coinbase to be able to borrow against your assets. Otherwise, like the strategic reserve, like I think when we talked about this, Maddie, I don't know about you, but I was pretty indifferent. I don't know. There wasn't like any excitement here between us about it because it was like a win-win either way for us. Bitcoin strategic reserve, crypto strategic reserve, and now it's just, hey, we're just keeping the crypto we already have, and now let's develop a Bitcoin buying plan. It's like, okay, whatever. But yeah, I don't know. I think I do need features, and if I'm able to borrow against it, then I do like some of the Bitcoin-backed loan opportunities because then you're able to make your money work harder for you. You're able to put that capital elsewhere off of the investment you already have, which is Bitcoin. So I think that's just kind of cool. What do you think, Matt?
Oh, absolutely. Again, being able to borrow against it with a proper LTV, right, to where we're not sacrificing the integrity of losing our assets. Yeah, it can be a very powerful tool. And that is one of the big elements we talk about with this, the handful of assets. We're being very, very picky about keeping a small portion of long term. The big goal with that is to borrow against in the future and not really focus on like, oh, this is how much I can make on this asset. It's to be able to put it into other cash flowing assets, whether it's real estate or Turo or whatever, other cash flowing businesses make sense for you.
Maxwell, any new partnerships? Haven't been following Casper since the big split.
Where'd you go, baby? You ran away. Gavin and I were chatting about this, and it is really crazy how quickly sentiment changes in this space. And even just a handful of down candles will be like, you'll see Twitter just blow up, like bull market's done, right? Like, or like you saw the Casper Labs part, and don't get me wrong, it was not a smooth transition. There was a million other ways to go about this in a more mature way. It was a very, very ugly transition. So I understand that a lot of people got very gun shy, but when you see price already that depressed, like at some point, right, you're going to see a turnaround. And in fact, in this particular capacity, it was a matter of days that we were below some of these key levels. And now we're kind of just back to some of those pre-Casper Lab departing levels already. And we've kind of been maintaining them for the most part. When we look at new partnerships, though, we do have Cowl Network, which is going to be providing kind of like a base layer for people to build on for DPIN or GPU sharing, a variety of use cases. But it's a very like base layer network that people can collaborate libraries on a variety of different things. We also have Router Protocol, which is one-click transfer of or bridging of stable coins from one network onto the Casper network. That makes bringing liquidity onto the network very, very easy. Obviously, liquid staking is a very big deal as well. Being able to still earn staking rewards, but then be able to receive somewhat of a synthetic asset and be able to do other things with those synthetic assets. Very powerful. And if you guys are really interested in finding out what's going on most recently with the Casper network, we had Michael Stoyer back on the show for a second interview. What was it, last week, Gavin? Just last week? He was here 2 weeks ago. Okay, the 10th. So wow, yeah, it was literally like, just a few days ago. So please go check out that episode, guys. It's not a filler episode. It is all what's going on, progress, expectations for the future, and what's going on with Casper 2.0. So highly recommend you guys go check that out instead of hearing me yabber about, just a couple talking points here. Mm-hmm. That's really where the juice is.
Yeah, and also too with Router Protocol and the other protocol that offers the liquid staking, those are coming with Casper 2.0 on mainnet. So It just, integration just happened on testnet this week. So when it comes on mainnet within the next 2-3 weeks, I think is what Michael said, that's when you could see those DeFi use cases on the Casper network, which is kind of really exciting. Last question here. Marvin says, do you believe after this video and hearing the possibility of getting on a top 3 exchange that we can reach $1 this bull run, talking about Casper here, obviously by Marvin?
Yeah, no, I think it's still possible. My TP plan involves a $1 plus take profit as part of that plan. Now, like anything, right, we take a multi-step approach, and the goal is to take money off the table and to mitigate risk on the other side of the trade. We do a good job with the DCA. We give ourselves tolerances. We have consistent ways that we invest, sometimes limit order, sometimes DCA. Primarily have been DCA versus limit-based ordering. So we have that strategy, and that we've been consistent with that. We need to follow through the same way, no matter how bullish we are on some of these big targets, right? People are, Matt, you think XRP is going to $20? Why would you even sell any at $8, right? If you know that it's going there. It's about taking money off the table, because what if you only reach 2 out of 3 targets? Wouldn't you be happy that you took 50 to 60 or 70% off the table, and then you still had some in the market, and then the market turns around on you and you got to carry some of that back? At least make sure that with your TP plan that you are paying yourself back, right? TP1, you need to be paying yourself back of what you put into the trade. You also need to be realizing a little bit of profit, right? Like, let's not let all that hard work and all our hard-earned money, just go right back into the bear by not realizing those profits. So you guys can check out our multi-step exit in the coin library for Casper. I do think that $1 is achievable. I've looked at market cap. I think that it's achievable, especially with the rotational opportunities. A T1 listing would definitely help that along, because you're going to have a little bit more access, a little bit more volume. I would still point to looking at examples like Doge that didn't have a T1 listing during its crazy double peak, right? You had like Robinhood and a couple other crap exchanges, but like they were expensive, they were slow. They really didn't get Doge until Doge had already done some stuff. And that was a crazy trade opportunity. And that was not available on T1. You can even look at XRP, right? When we had the announcement and it still wasn't fully relisted yet, people were pouring into XRP on just the announcement that XRP was not a security, was not listed on US exchanges yet, right? So yes, huge benefit when you get a T1 listing, but I wouldn't say that I'm changing my price targets based on T1 listing happening or not. My TP plan is my TP plan.
Yep. Actually, a lot of, just wrapping up here, Maddie, a lot of bullish news coming out, maybe just in case of Ripple and not directly for XRP, even though we see that response in XRP price today. And even with like Hedera, I know Hedera has like a partnership with NVIDIA. And so I think that's where that guy was pulling from, GM and NVIDIA doing self-driving cars. How can Hedera get into this? Hedera could get into it, maybe with like micropayments at charging stations, or do something similar to like Kia and Hyundai for Hedera, and do something with supply tracking that is very feasible, that they could apply, their AI models and use the Hedera blockchain for that. And then Casper coming with Casper 2.0 here, with the test net this week and with mainnet on the way. So, I mean, we have bullish XRP news, Casper news, HBAR news. Everything's looking great. But, Matt, we have to see that turnaround in the crypto market. I know there's tariffs right now. We're seeing increase in global liquidity. We're seeing currencies trade well. And so, like, everything needs to align for, crypto to do well this time around. And Dan was talking a couple of weeks ago and just talking about how there's just so many mixed signals out there. And it's a mixed bag, and there's no like clear market direction right now. As you thought like a couple months ago, maybe like 6 months ago, you thought the stars were going to align. Then you have Trump come in with the tariffs. And so that impacts all the rest of the markets. It definitely impacts risk on markets. People get fearful and want to flock to things like gold, which are creating new all-time highs right now. And so, Maddie, it's such an interesting time, man. And just to kind of wrap up, where do you think the next 6 months look like for crypto?
You can look back on historical data and we can try to say like, okay, these periods or these quarters, generally breed a bullish or bearish month, right? And we've seen so many deviations. And as you get more and more data, let's say we get another 10 years of data in the crypto market, we will get another 10 years of data in the crypto market. Mm-hmm. But you start to look at that, and those percentages of likeliness of bearishness or bullishness will change drastically when you have a much larger data set, right? Like it's if you go and you poll 10 people at your local Starbucks and you ask them about something, right? You're going to get a much different survey percentage versus sampling 5,000 people over 6 different cities, right? Yeah, a lot of idiots, especially if they're Starbucks. No, Dutch Brothers is where it's at now these days. But you mentioned a lot of good things there, Gavin, and where the market is going. I think that one of the things that Dan pointed to on this most recent update, on yesterday's update, was that the Fed is looking to basically not necessarily change their cut schedule, but change their QT modeling, right? So backing off QT, not reducing their balance sheet anymore, and essentially being a little bit more accommodative, strengthening the bond market a little bit, right? And that will definitely change interest rates. It'll change a variety of different things, right? And that can help the markets, the risk on markets in a good way. So when we're looking at the chop that's happening now, if we can at least consolidate maybe a little bit more here, but not strike new lows, I think that would be the optimal situation. So if we got maybe like 2 to 3 months of ranging, which is not what I'm hoping for, but I think that it's probably the healthy thing for the market to do. And then we saw some leaders like Bitcoin and a handful of others kind of start to make those impulses again. That would be the ideal situation over these next 6 months. But again, don't be surprised if we see some consolidation after this big set of bearishness. Just like after we got those big sets of impulses, we had all this consolidation, and everyone's trying to say like, oh, well, we're about to have another leg up. That ended up being the case, right? That was distribution back down to reaccumulation, and that's the normal and healthy thing to do. So if we reaccumulated for a couple more months here, that would be my ideal situation to have confirmation that we are actually ready for another bullish leg.
Mm-hmm. And last thing, Israel kicked off more war yesterday. The little peace time is over, and now we're back bombing brown countries again. So, or
with our tax dollars, yep.
and so even with war, the markets become uncertain, and so this is where you start seeing flocks to more traditional markets and out of cryptocurrencies. And so everything is pretty uncertain right now. There's a lot of bullish news, crypto news that we see right now, but there's a lot of uncertainty going forward. And so there's a lot that could happen here, team. And so you best stick around to see where this all goes, because, I even posted something last night. It was late last night, Maddie, and I wanted to post this meme, and it was in regards to Bitcoin. It's like, oh, could we see a new low on Bitcoin? And we've talked about this, if you guys have been watching the shows, we've talked about this actually a lot. And I don't know what Maddie's opinion on this, but it could very well happen. All it needs is a big catalyst to jump on, and market makers will pull price down. They'll pull it down to 72,000. And so we talked about a couple weeks ago, is it unrealistic to see Bitcoin price get pulled down to that zone again? I don't think so, Matt. There's so much uncertainty out there. And so we see war, we see tariffs, we see everything that's going on in the macro right now. That causes fear, and so market makers are going to use that and rip price down to those levels. And so I don't know, Matt. I think it's still on the table, man. I think it's still. A bunch of people voted on the poll and said no. I think it's still up for the taking here.
Absolutely. You know, we retested the previous micro floor that was being built like in that 90-ish K region, and that is currently being treated as resistance. And we have key support in the 70 to 73K region that has not been tapped yet. We got very close. And even 2 months ago, everyone was like, you're an idiot. You don't know anything. Like, we're not coming back below 80K. If we drop below 80K, we're in a bear market, which based on what? Based on your entry? Like that doesn't mean anything. So you're right. Like I think that legitimately people will tell me we're in a bull or bear based on what their portfolio looks like. And that doesn't mean shit about shit. But really, like guys, again, we've talked about it over and over again, the theory of imbalance, the theory of creating higher lows at previous topping structures is the most healthy thing a long-term market can do. So you guys should be rooting for that, right? You should be rooting for a healthy rebalance market. Why? Because that actually gears you up for a longer and healthier bull run, right? Instead of just having to guess and hope that these next two impulses to get to your target, you now know that you've satiated that previous accumulation zone, and we're ready for another leg up. So, you know, get locked in with the charts with this guys at CryptoCharge. You're going to feel a lot more confident. You're going to understand why we were rooting for these prices. Not that we need the entry. We just know what's required, and we looked at it objectively, and we don't cry about when it happens. So,
Yep, they get that clip on Twitter. It's just Maddie shitting on we need lower price in Bitcoin. It's like, oh, you bear. You know, it's like, dude, this is what needs to happen. So, all right, team, we had a great show today. If you got anything valuable here, make sure you leave a like, and we'll be back with some more banger content next week. Bye.